Hey everyone, me Kevin here. Welcome back to another market closing live stream. We've got a lot to talk about today. First of all, Powell had his testimony. Cathie will be on CNBC within the next 50 minutes, so we'll be covering that as well. I also invested $100,000 today into the market of buying the dip. I did send a shout out to everyone in the Stocks and Psychology of Money group for that. We'll talk more about looking at sticks in a moment though. Let's go ahead and first wrap up, do sort of a little summary wrap up here. I've got some notes on Jerome Powell, and then let's get into how the rest of the market's behaving. So we know that Jerome Powell made it very clear, and this is something that is believed regularly, that when we look at the inflation numbers, the CPI inflation numbers, they continue to come up in what he calls, areas, restricted to categories associated with the short-term reopenings. And if we think about the last CPI report, when we look at the headline numbers, we know, and this is the thing that we always have to consider, okay? We know that all of a sudden what happens with inflation is when we get big headline numbers, you get media folks who all of a sudden go nuts over the headline. Now, I don't blame them because they put the details in their articles as well. So it's not their fault. Just society loves to eat up these headline numbers. The problem with these headline numbers is they are misleading. When we look at the actual details within the CPI report, we see it's used cars up again. We see it's air travel up again. But guess what was not up last time? That was last time only up 0.4%, but is up over 10% this time. Hotels and lodging, right? So these are all, it makes sense. These are part of the reopening. In fact, we've been doing so many rallies over the last 2 weeks. We did 9 rallies over the last 2 weeks for the campaign. We've got our 10th rally coming up in Bakersfield, which you're welcome to come to totally for free. Go to meetkevin.com. But we're basically saying at our campaign, we're the reason hotel and lodging prices skyrocketed. So we're sorry, everyone. But we've been booking so many hotels. It's probably our fault. So sorry about that. But anyway, that's also temporary. So Jerome Powell was then also asked specifically about the housing market and how mortgage-backed securities might affect the housing market and their continued purchases of these mortgage-backed securities. And he mentioned that he is in the camp that would rather taper both treasury bonds and mortgage-backed securities at the same time. That's because you actually have two camps within the Federal Reserve. When you read the Federal Reserve minutes, you can see this division between some folks at the Federal Reserve who want to only taper mortgage-backed securities because they believe that the real estate mortgage market has plenty of liquidity. But others say, look, we've got plenty of liquidity at the treasury market as well. So let's just taper both together. So this is something that this is the first time we've actually heard him align with which side he is on. Addition to that, regarding worker shortages, he mentions that it's one thing that I thought was very interesting is he mentioned that he didn't think the extra unemployment boost to $300 per week is going to be, first of all, it's not going to be much of a factor for much longer. But he also mentioned that he's not seeing a very big difference between states who have prematurely cut the $300 per week and states that have not cut the $300 per week. He's not seeing that difference and actually seeing more workers come back. Instead, he believes a bigger factor in what's happening in the labor market is this mismatch between people who basically had a job, who had a career, and all of a sudden need to relocate into a new career or into a new business or into a new field of work that right now doesn't fit their current skill set. And so this is a belief that Jerome Powell has. Now, the problem is, and he was pretty clear about this, it's very difficult to be certain exactly what's going on. And he's very transparent about that, which I appreciate. There were a lot of times during his testimony that he said, I don't have the answer to that. And one of the things that I found, for example, when I'm on campaign rallies, is people appreciate you answering their question. Like, answer the freaking question. So when I answer the question, which I do very bluntly, especially in the last in the last couple of weeks of rallies where this is exactly what folks want, I'll clearly say, I don't know the answer to that, but I'll find out and we'll get back to you. I'll even say, this is my suspicion, but my suspicion could be wrong. But I make my stance very, very clear. And this is what Jerome Powell is doing. He's giving us an answer. I don't know. This is what I think, but as soon as we know more, we'll give it to you. And in fairness, I'd rather that than feel like Jerome Powell is just lying to us and then he's going to backstab us, right? Like, the saying, it's better to be strong and wrong than weak and right. I personally disagree with that. And I actually think Jerome Powell disagrees with that as well. All right, so let's keep going here. we have Powell was also asked about digital currencies, and a future digital dollar is a note that I have here. Oh, yeah, okay. So basically, this particular portion here, the Federal Reserve announced, and this was a new one, that they're going to release a report in September about how they might be able to actually include the benefits and risks of a digital dollar, so a central bank digital currency. To be clear, they've been working on this for years. It's old news at this point. JP Morgan uses an Ethereum-based JPM coin. Other banks are experimenting with these. They're great. They're used for institutional investors regularly doing cross-border transfers. They're phenomenal for these purposes. What kind of additional benefits they would actually contribute to the US economy if we had a Fed coin, we don't really know yet. And the Federal Reserve says, look, we don't need to be first. We just need to be right in how we do central bank digital currency. So yeah, those were the big takeaways from Federal Reserve Jerome Powell. We did also have mention. Let's see here. No, I covered that already. Yeah. Okay. Oh, this was interesting. So let's see here. A later. Okay, this is interesting. I also have this note here that Jerome Powell is also someone who prefers to taper a little bit later than expected. So a lot of folks think the taper could come as soon as really like August or maybe even late August, somewhere around here, that within the next meeting or two, we could see a taper. Most people believe that the taper would begin in Q1 of 2022, which is January through March. However, the market on average is kind of suggesting, but it could be a month earlier, or it could be a month later, or sort of December to like April. That's kind of the range that most, like if there were a bell curve, the peak of the bell curve of where expectations are for a taper will be somewhere between December and April. And the interesting thing about this is we know that Jerome Powell is in favor of actually tapering later. I personally do not expect the Federal Reserve to taper until we get September and October inflation data, CPI data. Now, keep in mind, September and October CPI data won't actually come out until October and November, right? So it's always hurry up and wait with the markets. But anyway, this gives you an overview and a summary, my belief on exactly what Jerome Powell just said. So you have details on this. Let's now go ahead and jump on into what's going on in sort of the broader market. Let's find out what else we need to know in the broader market, and then let's understand what's happening with what Cathie Wood is planning on discussing here. I'm excited to see that. So let's see what we got. We're gonna go pop on over here. Whoa, there, horsey. SunPower. Oh my gosh, SunPower just plummeted 14%, and it's just bleeding out here on the day. No particular singular news catalyst that I can identify here. We had a low of 1975 in May. We just had a stretch down to 24. This is very interesting. I'm going to see really quick what news may have happened here with SunPower, but I'm very curious about this. So give me 1 second here. Let's see here. 1 sec, sorry. Okay. All right. So let's see here. SunPower. Let me pull this up. SunPower. I do want to find out what happened here with SunPower. Okay, so we have SunPower news. Most in 21-week slide. SunPower to provide solar and battery storage systems to Woodside homes in Northern California. Okay. And why is it falling? Credit Suisse assumes SunPower at underperform. And that's all we have was yesterday, maybe a downgrade from Credit Suisse. That's it. But 14% today, my goodness. Let's see here. Let's do SunPower market cap. Let me get a quick update on that. So SunPower's market cap is $4.13 billion. That's interesting. I mean, it's a plummet today. Yikes. Okay, let's get back in here. All right, so let's see here. Okay. All right, so then we have OSAT. This was up substantially yesterday, though. I mean, sure, it might be down 12% today, but I think this was up like 80% or something insane yesterday. But just keep in mind, what this stock has done over time here. It's been very, very crazy. 93 million. Oh my gosh, in shares. It's unbelievable. All right, looking at losers here. Virgin Galactic down another 11%. Well, buy the rumor, sell the news really ended up being true here. That is absolutely incredible. Yeah, then we've got AMC is down 11.59% right now. I did put $100,000 into the market today in something that's red today. But boy, oh boy, 11.5% on AMC. That's a yikes. We're basically heading for this 2881 level here. Yikes. And what else do we have here? Playboy. 9.89, Voyager Digital 9. Well, here's Voyager Digital 8.6 to the downside. Wow, Voyager Digital at 13.93. What's Coinbase got to be at? Coinbase 238. That's 232 actually. It's actually not that horrible for what it could be. Tesla. Let's see. Tesla is that's not Tesla. Let's go to Tesla here. And Tesla we have at 657. Yeah, pretty rough day here. And pretty much everything selling off. Look at that. Big digital assets at 92 cents, folks. Oh my gosh. I've been watching this one. The problem is it's been on such a strong downtrend and the volume keeps trouncing this one down that I have not been very motivated. Let me get a draw here. There we go. Ay, ay, ay. Yeah, we need to break this disastrous trend. 21% down. That's Okay, then we've got CCIV down. Now I did send an alert. I want to say last week to and we sold Churchill. It was like $28 or something like that. I had options on it. I had shorter term options on it, so I pulled profits out of that. But now I'm starting to get a little tempted to start considering a buy-in again. Well, but then get 24. I don't know. I'll keep an eye on this one. So then we've got Golden Nugget, GNOG 6.92. Okay. Build-A-Bear down 17. Yeah, 15, 16. Personally, I think it's incredibly overvalued at this price. It's a small cap, so you've got a lot of hodlers that came in under momentum that could really hold this one up. ChargePoint, wow, back down 24. I mean, why do I feel like we're going to get a May all over again here? Look at this. It almost feels that way, doesn't it? 172 on Enphase. There goes, why? 6.5% on Enphase? It's mind-blowing. Oh my gosh. C3AI is down to $51. It really, it almost feels like we're getting another like, we're heading back to another May low. Just an insane path here. So then we've got Draftkings. Draftkings also down. Let's take a peek at Draftkings for a moment. Oh, that's G-Tech. Let's go off of this. Let's go to Draftkings. Okay, here we go. So here's Draftkings. Jeez, but this is almost the definition of the market that we've seen. We've seen this insane market of just down. We get these short little spurts of up and then down again. It's been very painful. The last 4 or 5 months, and it just keeps going. It's the dip that just keeps on giving. This is why I mentioned even as recently as yesterday, like, I'm just not excited to buy anything. I'm not seeing any deals. And the day after I say that, there's a deal that I throw 100K on. But again, that's also because when I see opportunities in dips is when I like to buy. I hate buying when things are green. I regularly get asked like, oh, well, things are going up. What should I buy? What should I buy? I feel like I missed out on the dip. So what should I buy now? It's like, well, you could just wait for the next dip. Let's see here. All right. So 4.11% on Redfin. Wow, under 50 or under 60 again on Redfin. BlackBerry down 4%. 3.93 on Snowflake. Palantir 3.94. Open Door 3.89. Yeah, I mean, these are some good sells. Whoa, Wayfair. Oh, Wayfair 298. Hold on, let me see something really quick about Wayfair. 1 sec. You know what? Here, let's listen to CNBC for a sec. I just want to pull this research up really quick on Wayfair.
We have 35 minutes left of the session. Dow, S&P higher, Nasdaq, Russell lower. The Russell down 1.4%. Still ahead. Cathie Wood on the record will speak with the ARK Invest CEO about her latest stock moves, plus her thoughts on China's tech crackdown and a new personal investment in a fintech company that's jumping into the world of commission-free trading. As we head to break, check out some of today's top search tickers on CNBC.com. The 10-year yield on top, followed by Apple, Bank of America, AMC, and...
Whoa, it's back to 1.35 on the 10-year? Oh, that's incredible. That's incredible. It fell right back down. That's actually very, very good. So let's see here. Okay. What about... Okay, I want to get the financial news on Wayfair really quick. Okay, so Wayfair... I actually don't see anything on Wayfair here. Oh, here we go. Okay, this was a week ago. Wayfair slide says Jefferies lowers Q2 sales estimates. Interesting. Okay. 7.6 Q2 earnings. Earnings call. Interesting. Lowered sales estimate below street after observing a deceleration in web traffic from initial pandemic demand. That is interesting. Yeah, that's okay. Let's take a peek at that. And then we're going to go back to the sticks here. So in case you're just now joining, we're looking at Wayfair, trying to understand traffic changes. Yeah, let's see if I can find that myself. Let's see if I see what they're seeing. Oops, if I could spell it right. Well, actually, I did spell it correctly, but apparently Apple thinks Wayfair is Mayfair. It's just annoying. Yeah, okay, a little bit of a decline. Okay, that's interesting, but Etsy's actually still going strong, much stronger than Wayfair. That is very interesting. Oh, wow. Okay. Yeah, okay, great. I'm going to pull back here to the sticks and let's see what else is going on. That's interesting. So back on the sticks here, which is this button, we have DocuSign selling down 3.25 now. Etsy down 3% as well here. Etsy's still doing decently at 182. It's not exactly a bargain that I would buy at 182, but yeah, you've definitely got a big sort of broader sell-off here. You're in through a lot of madness in the market right now. It's kind of incredible just to see. Yeah, I mean, even Matterport. See, here's another one. Matterport's another one that I sent a sell alert on at just over 17, and which was actually, because we were buying. I think I bought 420. I bought 420 right here, 12 something. Sold it when it hit 17, and so now I'm looking for a rebuy. I haven't really bought back in because I took 200K out and I only put 25 back in. So I'm on standby to kind of see what I want to do with Matterport. But here's another one that I'm tracking. So I'm going to watch Matterport as well. Tattooed Chef is overvalued. Fisker is 4 point, but I'm not shorting it. Or am I? No, I'd always tell you the truth on here. Arrival down. Wow. Oh my gosh, Arrival. This is usually a $20 stock. And it's had a pretty crazy ride. I know in April, May it fell. Oh yeah, April, May was brutal for them. That's interesting. Yeah, it went back to $20, but as soon as it hit 20, it just plummeted. Let me see really quickly. I see you, Rudy. I know you really like that one. Let me quickly look at info on Arrival. I mean, I think manufacturing constraints are going to hold back a lot of these alternative vehicle stocks, which does remind me, let me take a quick look before I look at the rest of Arrival. I do want to take a quick look at FUV. Oh my gosh, Arcimoto's down like 8.9% today. The swings on that are crazy. We've got, hold on, I just want to see the green really quick. We're spending so much time in the red, I'm not paying attention to the green here. Okay, so crypto bounced back up a little bit. That's good. Good for crypto. But yeah, really, I mean, you don't have wow, Apple though. OMG. Apple almost up 3%. That's incredible. DD was up higher, but gave up a little bit. Metamaterial trying to come back. Yeah, low cap stock. So you're going to see a lot of volatility there. Yeah, really the runners right now, Apple and Google, and Amazon. I have Body's being shorted to the ground. Yes, it is. Body is very, very, very short. Warrants were recalled early on arrival. Oh, that's interesting. I wonder why that would take capital away from them. Okay, hold on a sec. Let's see. Recalled. Let me make sure I have this right. I'm not an expert in warrants, but when you issue a warrant, you take cash, but it's seen as a liability because you have to provide stock. Right. At some point in the future, you provide stock. Oh, okay. No. So you could keep the stock, but now you're getting rid of the cash. I'm sorry, you're getting rid of the stock. So you're diluting the shareholders earlier than expected is essentially what's happening. Okay. That's it. So that I believe. I need to verify that. I'm not an expert in warrants. I've never bought warrants. I've done research into warrants, but I will tell you I'm not an expert in it. I believe that's the case. And the SEC recently, see, warrants used to be written in as assets, but because you're creating this future dilution, they are now being recognized on a balance sheet as liabilities. So that's interesting why they would do that early. They probably, I mean, I suppose if you're going to dilute, what's it called? Your shareholders, you may as well do it when it's at a higher price, right? So I wonder when they did that. See, if this is Arrival, that's Arrival W. No, I want to go to Arrival itself. There we go. Arrival stock. Yeah, here we go. Did they start diluting? Maybe I wonder when. I will find out. Give me 1 second. July 18th is the last day for warrant exercise on Arrival. Yeah, warrant exercise would give individuals the opportunity to buy that share, but the company can actually make that exchange happen sooner. So the company has the option to exercise you sooner than your warrant date. See, warrants are like option contracts. Warrants, the only reason they're called warrants and not options is because warrants are between you and the company. Option contracts are between you and another party, unrelated to the company. Like you do nothing with the company when you're trading options with other people, right? So, yeah. Yeah, Alex, I'm pretty sure they're still editing Epoch Times, but thank you for that. Yeah, they have. I'm pretty sure they have a YouTube channel. That's where we'll be posting that. Okay, I do want to get if I can get a warrant date here on when they did a recall here. Let me see here. Yeah, they forced it in the last day, July 18th, the warrants are worthless. Oh, okay. Let me see here. Financial results was 6:30. I just don't see information on, but I could be looking in the wrong place. Again, I'm no warrant expert. Let me just see if I can put in Arrival W. Is that going to tell me? I don't think so. Arrival W. I'll try. Arrival W. Warrant monitor. Oh yeah, never been in this neck of the woods before. This is insane. Yeah, I'm the wrong person to go deeper on warrants. Sorry. But okay, if that's what's going on, then that's interesting. All right, so let's see here. Yeah, Cardano recovering nicely. Wells Fargo doing well. Wow. American Airlines gave up a big run. Yeah, I can't stand the recoveries right now. But honestly, everything's getting whacked, with the exception of the index funds. The index funds are doing great. I did not dip into margin. No, I did not. Cashola. Oh my gosh, what is happening at Upwork? What the HE double hockey sticks just happened here? It's at $50. Oh my gosh. Why is it down 17%? They had to have some bad news come out. That had to be bad news. Let me see. That's insane. It had to be like, oh, people are using the service way less or something like that, which is possible if you think about it in post-pandemic. Individual company news. So Upwork shares down 10%, most in 11 months. Volume rises. I don't see a reason. That's nuts. They don't have earnings until July 29th. I have no idea. Thoughts on Enphase? Kevin, late to the party. Thoughts on Enphase? I actually haven't even gotten to Enphase yet. It's just it's all the good companies are dropping today. Okay. Keep plugging into generic. Okay. No. Just volatility. Okay. Let me see what's going on the actual stock. Yeah, but Upwork being down as much as it is right now is insane. Okay, so you're asking about Enphase. Let me find out. Okay, let me silence that. Here we go. So Enphase is here. Wow, 6.74% today. Oh my gosh, and EXPI is down 6% as well. This is insane. These are great companies. I mean, hey, I guess maybe we're going back into a May buying opportunity. Gee whiz, what a disaster. And then you've got Tesla at 654 right now. Ugh. It's incredible. That's interesting. Okay. All right. Let's get back over to the chart here. No, do I think this is an overreaction? Not necessarily. We're still paying debt on money that for the original water aqueducts made of asbestos, while the private water districts. Yeah, I'm not exactly sure what you're referring to, Sir Tech. But anyway, let's take a peek over here. I'm very, very interested. Oh, that's an interesting argument here. Buy Tesla at earnings because of Bitcoin. Yeah, but I don't know if they mark to market when it goes down. That I don't think that they don't with Gap. I have to double check on that. Or maybe it was the other way around. I don't know. Maybe they could take the expense, but not the other way around. Something with Gap recognized. I have to look at that again. It's been a while. Yeah, you can exercise an option before expiration. I don't know why you would want to, though. Apple asking to increase iPhone production by 20%. I know. It's incredible. Very, very incredible. Yeah, no, Apple's kicking butt. Apple, $1 billion for housing. No, I haven't seen that. Let's get over here. Apple, 1 billion housing. Oh, wow. 6 hours ago. Very interesting. Look at this press release. Funding is unlocked capital for new projects and benefit of thousands. So Apple is accelerating its support for affordable housing initiatives. Over the past 18 months, has developed more than $1 billion for projects across California. Capital to facilitate the construction of thousands of new affordable homes in at-risk communities. Good for them. Look at the free market stepping in. That's beautiful. That's very good. Hey, look at that. Apple has supported affordable housing communities across 25 California counties, from Alameda to Amador to Ventura and to Yolo. Hey, Ventura, what are they doing over here? You calling me broke? No, that's totally fine. We need affordable housing in pretty much every city throughout California. Almost every city needs it. Every city. Even San Francisco, right? I mean, every city does. Oh my gosh. Leaf blowers outside. Sorry if you hear it. Oh well. It is what it is. So, all right, DD Ethereum. Oh, that's a good share. Thank you for that. Appreciate that. Yeah, every city in America. Yeah, seriously. Every city in America needs affordable housing. We just don't have enough housing is the problem. So I'm gonna write that down. Apple. Oh, Bill, thank you. Double the exit lanes out of the state. Oh no. Yeah. Yeah. All right. So what else do we have? We've got Apple. Yeah, Apple doing very well here. Netflix 2.05% to the upside. Rocket companies, Alphabet, nice. These guys are the ones moving. Just very safe tech. Safe tech is doing well right now. And even some of the safe recoveries, like Whirlpool's gotten beat down. Whirlpool's not a bad one at all, but I just wonder how much demand for stuff has been pulled forward. That's a concern as well. So, sitting, like how many, I don't know. Yeah, how many people need a new washer and dryer, who haven't already gotten a new washer and dryer? I don't know. That's an interesting one. Recurring goods, probably something that's juicy, like Amazon, recurring goods. I think Amazon's doing very well, but they've traded sideways for so long, they kind of deserve a little bit of a pump here. Yeah, all right. So anywho, then we have Ubiquity still sitting at 301, not really providing a buy the dip opportunity here. You've got Shift Technologies and Square down, and AMD's down as well. Gosh, AMD at 89. This has been a stock that's really been doing pretty well recently as it was running over into the 90s. But boy, oh boy, giving that up a little bit. Shift Technologies down 1%. General Motors. All right, Waste Management's over here. Nordstrom, Tesla now down a full 2%. Sonos 2.34. Wayfair came up a little bit again here, right after we started talking about them. Pinterest $70. SoFi sitting at 1553. Spotify 254. Let's go ahead and listen to Sarah for a moment. Let's see what Sarah's got.
To end the federal ban on marijuana. On yesterday's show, Tilray CEO Irwin Simon told us he's pretty optimistic something will get passed in the next 24 months.
I think something happens in the next 24 months. And there's a lot, I think in regards to what could happen in Congress, what could happen in the House, what could happen in the next election, I think it's important out there. But again, I come back and say voters are out there saying we want some type of legalization. 93% of Americans, say we want legalization of cannabis.
Let's get to Elon Moy now, who's in Washington with the latest. Elon, what's in this proposal?
Yes, Sarah. Top Senate Democrats are proposing to legalize cannabis at the federal level, a move that would clear the way for the industry to have full access to the nation's banking and financial systems. The bill would remove cannabis from the Controlled Substances Act. It would also establish a minimum age of 21 to buy marijuana.
21.
The catch, though, is that Democrats also want to impose an excise tax on the industry, 10% in year one, climbing up to 25% by year 5. After that, the tax will be calculated based on weight and concentration, be equal to 25% of market value.
I will lay myself down to do everything I can to stop an easy banking bill that's going to allow all these corporations to make a lot more money off of this, as opposed to focusing on the restorative justice aspect.
What?
Now, one key company is already publicly supporting this proposal.
So wait, you're making it harder to get banking done for cannabis?
Thrilled and ready to work with Congress to establish a well-regulated and adult use market here in the U.S. Guys.
I was just quickly trying to Google, Elon, what the excise alcohol tax was and if it was comparable, but it's listed here as dollars per proof per gallon, so I'm not quite sure how easy it is.
Yeah, complicated government for you. All right, let's keep going here. All right, let's see. Let's jump on over here to Fox, see what they got. Okay, nothing. Well, fine then. How about we give Bloomberg a shot?
Trading and things like that, and it's been doing fine.
Yeah, Hong Kong's been in the news just about every single day here. Are you contemplating any possible changes in how you operate in Hong Kong because of the controversy there?
Moynihan, he's going on to CNBC as well.
Yeah, the team does a good job. Yeah, they're dealing with the virus and everything else, but obviously they're we obviously keep our eyes close to the ground, ears close to the ground to hear things and make sure our team is taken care of and doing the business.
Nerwin, I got a notification exactly 30 minutes ago on the live stream, which was about 5 minutes after the live stream began. At least that's what my phone says. Did you not get a notification? In case you don't know what I'm talking about, I have an app in the Google or Apple App Store. You just type in Meet Kevin. You could download it. You could see videos and get notified, because YouTube doesn't always send all the notifications.
At the same time, some of your advisory fees were sort of flat, where some others were really going well, because there's a lot of M&A going on, as we know, a lot of mergers and acquisitions. Do you feel comfortable that Bank of America is fully competitive when it comes to those mergers and acquisition fees?
Yeah, well, you have to think about investment banking as a broad set of capabilities: debt financing, equity raising, and M&A. M&A is generally the smallest portion of the three, and we have always been dominant in some of the debt underwriting and very strong in the equity underwriting. So our M&A never looks as big. But we had $2 billion of fees. It was the third highest quarter ever. Missed the second by $7 million. The highest was the first quarter this year. Matthew Coder and team have done a great job. And so,
all right, it's boring. Let's go ahead and pop all over. Or pop back over to Weeble. All right. So, what else? You can vote or join the military, but no weed. Says Jeremy. It's true. It's true. Just saw there was a court decision to make sure that 18-year-olds could buy handguns. So there was a court that had tried restricting that, or an area that had tried restricting that to 21 years old. But that got struck down due to the Second Amendment. But marijuana could be a different story. Anyway, Upwork getting crushed, SunPower getting destroyed, AMC getting wrecked. The closing day's volume is hurting even more, which is not so good. Yeah, strong kind of rotation down here. Voyager Digital, Playboy, Arcimoto, GameStop. Wow, just lots of pain over here. Really, oh, hold on. I want to hit this on Apple News here.
Nice gain from the 140.
Oh, but we also have to see if Cathie's here. Hold on. Let's see if she's here. Nope. Okay, good.
9 cents today. All right, here's a question. Has meme stock mania reached the end of the road? Popular names tumbling today, including, oh yes, AMC, which,
Wendy's,
by the way, is down around...
Wendy's was up there for like a day. Get out of town. They're not part of the game. They were cool for 1 day. That's it. You get channel changed. All right, waiting for Cathie to come up. We got 12 minutes left for the closing bell. I wouldn't be surprised if they have her on at like 12:55 or like 12:53, something like that, for a 5-minute segment. All right. So, yeah, look at the cannabis stocks are actually selling off here. Cannabis, OGI plummeting, Aurora Cannabis plummeting. How are the others doing? Here's GTEX plummeting as well. Probably means all of them are doing this. Planet 13. Actually, not bad. Planet's not plummeting like the other ones are. 642. I rode that one for a little bit. I don't have it anymore. I took my tendies. There's some stocks I like going in for momentum. There's some that I like holding forever. Let's listen in here.
Now in the closing bell market zone, commercial-free coverage of all the action going in.
Good. Where's Cathie?
CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. And today we've got Ritholtz Wealth Management CEO Josh Brown.
And yes, this is true. Thank you for saying $2 for this. Go to meetkevin.com. I will be in Bakersfield this weekend. So if you want to come to a free rally, come this weekend to Bakersfield. Go to meetkevin.com to sign up.
Fed Chair Jay Powell testified in Congress. Nothing new, I would say, from the Fed Chair. Stuck to the transitory theme, even though he says the inflation is coming in a little.
Did we miss Cathie? Maybe we missed Cathie.
The Dow went above 35,000, but has not been able to hold that level ever since I put on that damn cap.
3 o'clock or so, 3:30 on Monday. So that has been the ceiling. We'll see if that lasts for now. But yeah, it did open above 35,000. there's been a familiar feel to the market, whereas below the surface is kind of a lot of weakness. A lot of stocks are just in pullback correction mode. But you do have the big growth guys really working and supporting the index. And what's interesting is what that really also tells you is the market is absolutely at the moment, transitory inflation mode, meaning anything that would benefit from a real acceleration in inflation that was sustained is really not been working in the stock market and vice versa. So whether that's a verdict or not, or just the ebb and flow of the styles and the factors and the themes and the flows, that's the question.
Josh, I wanted to ask what your views were on the small caps, the Russell kind of rolling over a little bit more significantly this week, this month.
It's tough because you don't want to see that, obviously, if you're trying to stay constructive on the market. But then you go back in history and you look at periods of time where there was this much separation and trend between.
Are they not going to air Cathie, or is she coming on after the bell? That's also possible. She's coming on after the bell. They kind of they've been pitching Cathie since 12, so it kind of made it seem like she would be coming on within the first hour here, leading into the closing bell. But maybe not. Maybe not. Oh well. Do not live in California, but if I did, I would vote and donate time and money to help the campaign. Well, thank you for that. I appreciate that. And by the way, why is oil dropping and energy stocks when inflation is going up? Everything. It's seriously, it's so hard to say this while this is happening. But look at what the market is telling you, folks. Oil's down 3.3%. Bond yields are down. Bitcoin's had a rough, few weeks. It's been kind of bouncing, dragging along the bottom here. It's not as low as it was, but it's been bouncing around. All of these recovery stocks are being pained. All of these are really saying inflation might be temporary, but we still have the inflation to deal with right now, and that creates uncertainty and fear and doubt. So in my opinion, the market's pricing in lower inflation to come. But in the meantime, there's so much of this vacillating going on. Everything just feels like it's selling. I think they're going to get Cathie on now.
Zoom, Coinbase, all of these stocks are down, some of them down 4 and 5% on the day. So what's notable about that is I think the market is getting more comfortable.
Somebody's saying Cathie's Twitter's suspended. She's not. I'm looking at it right now.
When it does that, you're going to lose valuation support in a lot of the names that I just mentioned, not because there's anything wrong with the company, but because we're pricing these things on cash flows that are like 4 and 5 years out into the future. And investors stop doing that when the spigot starts to slowly be turned off. So the XLK looks great, speculative tech not so great. To me, that's more important than large cap versus small cap right now.
Let's talk about bank stocks moving in various different directions today after reporting quarterly results before the bell today. Shares of Wells Fargo jumping after beating on both the top and bottom lines, boosted by 1.6 billion decrease in its allowance for loan loss reserves. Citi today moving a little bit lower, but only by 0.6%. And Bank of America, as we've been discussing, was down about 2.5%. Let's get to a comment from our interview earlier with Brian Moynihan. Here's what he had to say about outlook for trading volumes.
The amount of volatility last year, as you said, was sort of unbelievable as we were going through all the stress of the crisis and helping people get to the market, et cetera. But behind that, though, there's a fundamental market shift in terms of market shares that have moved towards us and the other large players because of competency and skills and the cost of investment that you have to make in these platforms every year, the electronification, the fixed income market, you name it. And so we've seen that share grow. Will there be less volatility? Yeah, because versus last year, because it was just outsized due to what was going on in the markets, and we're watching that come back through.
Clearly, that's not the most important part of their business, Mike, but I think a really interesting theme coming out on trading from all of the players is that this is a structural gain, even if it's not as high cyclically as last year, which I think is going to be interesting to note going forward. And actually, week to date, Morgan Stanley is up the most, along with Wells Fargo, and Goldman still higher as well week to date. And I think, it'll be interesting to see how they do tomorrow.
I don't think we're going to get Cathie Wood before the closing bell. Let me know what you think about this, okay? I just tweeted this. This is why you want to follow me on Twitter, too. So I'm at Real Meat Kevin on Twitter. I just sent this out. So curious to see what you all think about this. But anyway, at Real Meat Kevin on Twitter, see 7 seconds ago. Oil down, treasuries down, dollar up, recovery stocks down, tech down. In my opinion, the market is pricing in lower inflation to come, tagged with 1, but is so uncertain, so much FUD, that the market is simultaneously pulling to the sidelines or safe stocks like Apple. You know what I should have actually done is I forgot to tag this with 2. Hold on a sec. Sidelines, tag that with 2. Yeah, oopsies. I mean, I think it's obvious enough. Here, you know what? I'll leave that and I'll just reply to it. Number 2 equals the uncertainty we're seeing. Also helps us understand / explain why indices are still doing well. Rotation within, but the umbrella above keeps growing steadily. That's a good way to put it. That's interesting. We say indices, but there's no I. Okay. Interesting. Anyway, follow me on Twitter if you haven't yet. I do tweet stuff like this occasionally. All right. Let's see. No Cathie Wood just yet.
Much appreciated. Goldman Sachs, meantime, out with a new note today predicting the Biden administration's efforts to crack down on antitrust practices, that it will not hurt big tech stocks. It may even be a slight positive.
Javier here is asking, I have a question. If you win governor, what's going to happen to all the videos you do? I'm going to keep making videos. Look, governors probably work like 8 to 5. I'll probably work more, but I'm still going to be making videos. I can make videos fast. I'm not going anywhere. You're still going to get Kevin's thoughts on Jerome Powell and Jay Powell and everything. So I'm not leaving, as I say. Another question here is, like your plans for California, hope you win. Please let me know when you're coming down to Riverside. Stay tuned. Download the Meet Kevin app. You'll always see what location I'm going to next in the Meet Kevin app. You can also use the Meet Kevin app to follow my, to get notifications on my YouTube videos. So I'll be in Riverside soon enough. Stay tuned.
FTC quote, when a new commissioner has already drawn factual and legal conclusions and deemed the target a lawbreaker, due process requires that individual to recuse herself from related matters when acting in the capacity of an FTC commissioner. The FTC has no comment on this, and this also does come about 2 weeks after Amazon, which faces multiple FTC investigations, filed a similar petition. Guys?
Julia Borson.
All right, we're about 2.5 minutes away from the closing bell. Let's go ahead and get into the closing stocks, and let's see how the bar charts are looking here. We saw my tweet and my thoughts here. Let's see what we've got in the closing stocks. Quick reminder, I did put $100,000 into the market today buying the dip. Sent that alert out to everyone in the Stocks and Psychology of Money group. Keep in mind, if you take a look at that program link down below, get that 40% off coupon code, which the price does go up on the 23rd. Coupon expires on the 22nd. You get lifetime access to the content in the program and the alerts for the foreseeable future. No intentions to stop those at any point. But anyway, take a peek at that. So that way, when I'm buying the dip, you see right away kind of where my head is. And it's not really designed for you to copy the trades. It's not designed for that at all. It's designed for here's what I'm doing with longs or even shorter term positions. I have to be careful when I say short positions, because then sometimes people imply that, oh, like you're bearish on it, right? Anyway. So we've got Apple 2.2%, Honest Company doing well here as well, 2.54%, Metamaterial coming up a bit, Ashford Hospitality moving, Whirlpool 1.3%, Netflix Rocket, very nice, Upwork plummeting 17.4%, AMC plummeting 15%, SunPower, Voyager Digital, this guy's just getting destroyed here. We've got destruction over here as well, Arcimoto, Churchill, Newegg, Big Digital. I mean, these are all 7 to 9% down. Enphase slipping more into the close, along with SolarEdge down 7.5%. Some real pain here in the market right now. Draftkings, Roblox, Coinbase down 5.4%, along with Peloton down 5.3%. Yikes, Redfin down 5%. Lots and lots of pain right now in this market the way it is. 30 seconds to the close here. So if you have any options to trade, you got 30 seconds left to do that. I don't believe I do. No more options. I'm good. Apple, Amazon, and Google one's doing well today, but boy, everything else is just like getting hurt today. All right, let's listen to the closing bell. Oh, thanks for saying that, Drew. Get the course, zero regrets. Thank you for that. Who says you can't, Michael W? Who says you lose your freedom of speech when you become governor? That's garbage. You're thinking about the president. The president gets a lot more restrictions. Cathie can't. Oh, I'm sure she'll come just later.
0.1% each. The Nasdaq down by 0.2%. The Russell, the big mover, down by 1.6%. Real estate, consumer staples, utilities.
They really got to fix the audio. Ever since they went back to the show, it's just not right. It's just not right. All right, so let's find out how the market is doing. Well, into the close. How do we do today? Oh, now they're pitching Cathie. Okay, is she coming yet? Anyway, Dow up 0.13, S&P up 0.22, Nasdaq up. S&P up 0.12, Nasdaq down 0.22. Russell got smashed today, down 1.63. So the smaller caps getting whacked. All right, Upwork. Oh my gosh, yeah, just destruction today. AMC, not a very good day. I hate to say it, but the next line, and I've had this line drawn for a while, has been 28.81 here for AMC. I understand this is a big gap, but I don't know that I could really justify another support here. I mean, we've got about a double touch here at 33.75, but we broke through that pretty fast. Yeah, here at 33.80, we touched over there. Okay, maybe close. Slight bounce there. See, this right here was traders thinking this was a support from earlier. Yeah, that's what that was. But you could see a lot of good that did. That did not last at all. Oh, you can't see it. So dumb. Sorry. I forgot to change. Didn't push the button. So look, this is what I was showing here on AMC. These are the lines that I have drawn for AMC. The next one's right here at 28.81. But take a look here. It's possible, in my opinion, that folks drew a line here around 33.80 or 33.75 as a possible support line. And at 33.80, we got a bounce right here, which is sort of to me implies that at least some traders thought that we would bounce off that support line. But it wasn't a very good support line. So, it ticks right back down. Yeah, very interesting. Okay. All right, let's see what we got here. AMC 200 days, 33.28. Yeah, you could use the 200-day, sure. I've got the 200-day. Well, I have my 200-day, but hold on, let me go to the day chart. The 200-day is not 33.28. My 200-day on the day chart is 13.85. Maybe you mean the 50-day? No, see, the 50-day is 37.24. Yeah, I don't know what you mean there in the comment. So, not sure about that. Sir Tech, you're not a troll. I saw your comment about Jerry Brown's, Delta solution. I don't think that's the right answer for California. I think the right answer is building an aqueduct from Los Angeles or other parts of California to the Mississippi River. It doesn't take that much power generation to do that. Take about 10 power plants. You got 1,500 in California, so it's totally feasible. You could share the costs with the other dry states between here and there, Arizona, New Mexico, probably not Texas. But anyway, you can solve California's water crisis, and then you could stop bleeding the San Joaquin Valley of their water reserves. Very, very important. All right, so let's see. Let's see how things closed. Oh, we have earnings today. Of course. We have earnings. Hold on a second here. Let's get. I'm pretty sure Wells Fargo reports today. So okay, earnings calendar. Here we go. So we have earnings coming today. Wait, is it not today? Is it tomorrow? No, after. Oh, Wells Fargo was already this morning. Oh, that's why they were up. Really? Oh, I thought they were going to be after hours. Oh, my bad. Never mind. That was earlier today. Well, never mind. Then there were really no earnings after. That's boring. I hate it when they do the morning ones. Tomorrow, after the close, we get after the close. Not much exciting. Alcoa, American Outdoor Barn. It's probably going to be next week then we start seeing more earnings. Earnings are always so fun. Yeah, they were in the morning. Wow, okay. So next Monday after the close, we get IBM, Steel Dynamics. So we'll get some industrials. That'll be fun. On Tuesday, Cathie's still not on, by the way. On Tuesday, we'll get Ally before the market. After we get United Airlines, Netflix, Chipotle. Ooh. Okay, so next Tuesday, that's when it's going to start being fun with earnings. Ooh, then we're going to get a lot of earnings. Oh, good. Okay, and then next Wednesday, Johnson & Johnson, Coca-Cola before, Verizon before, NASDAQ, Harley-Davidson, they all report before. And after, Texas Instruments, Whirlpool, Kinder Morgan, Discover, Netgear, Equifax. Oh, we've got a lot of earnings coming. All right, so next week's going to be more fun. We got our banks out of the way. All right. Taiwan Semiconductors tomorrow. Yeah, exactly. Yeah. If only, what's it called? Cathie would come onto our show. That'd be really fun. Let's go back to the sticks here while we wait for Cathie to come into CNBC here. We are waiting for her over here. Do remember we do have the Bakersfield campaign rally. I do want to mention that this weekend that is free to sign up for. There'll be giveaways as well, which is super fun. I would mostly do that. It's a great way for everybody to kind of ask questions and have fun with trivia, and it's just really engaging. So that'll be this weekend. Go to meetkevin.com to sign up for that. And of course, get that 40% off coupon code link down below, which is that price does go up in about 1 week. 1 week in a day.
If that keeps going, that suggests to me that there may be a longer-term problem there, more of an inflationary dynamic taking hold rather than a one-time adjustment. Look at used cars. We'll see if they can get that supply and the inventories back in line. Look at airline prices, Sarah. They came back. Remember, they were down below where they were, and you've had several months of strong increases. So we'll see once things go along for a little while and you see these strong increases, do they begin to level out across the board? And do they start to bleed outside of those sectors that were the reopening sectors?
Yeah.
Steve, thanks so much for that. When Mike's pickup truck gets purchased, we'll know used car prices have peaked.
And if he actually makes money on it.
Well, there's no way I'm not making money.
I think the bigger issue is political.
I'm not.
Go for it, Josh.
I would just really quickly, The View led with their opening segment today. It was about inflation. The View. This is no longer a story confined to the Wall Street Journal. The problem that Powell's going to have is going to go way beyond anything he's had to deal with before. We haven't had a scenario with Main Street seriously questioning the wisdom of continuing these Fed policies. And I don't think it's going to stop at The View. I think this is going to become front page news all over the country if it continues at this pace. And that's going to be trouble. Politically. It could be trouble in the midterms. If the Republicans run against inflation and crime, they probably retake the House. So I think this is a bigger deal than maybe the contacts at the Fed that talk to Steve think it is. And I think it's going to get louder.
The View. Josh, I got to say, I'm surprised that you're not in the demo. I think up for The View.
It's possible that you love The View more than Closing Bell.
No, I like both. It was on the cover of the New York Post today.
It was on the cover of the New York Post today as well. That's right.
Yeah. But that could also be a sign that it's peaked.
Exactly. And the midterms are in 15 months. And if we're still talking a lot about...
Did you hear what Sarah just said? That was great. Could also be a sign that it's peaked. Yeah, all this peak FUD, right? Peak negative media. That's how I believe. I'm Sarah to the moon. I said it.
It doesn't necessarily mean that now everyone's going to... It's a sign of
right,
market
except it's being driven by very much goods-based market prices. Yes.
Yeah. Leah, let's come to you. What's your take on whether inflation is a big fear for equity markets?
I think it is a fear. And I think the other thing that is going to create some additional volatility certainly is how long is this transitory? If this is transitory inflation, how long is transitory? So I think this is something that's going to go on at least for months, if not the remainder of the year. Which will be interesting, but
look, it's I don't know that you could blame the media, but sure, the media is always going to look for sensationalized headlines. Big inflation and fear about hyperinflation is excellent clickbait. for the media. And it's not really the media's fault. It's just stuff that gets more views. So they're doing what society wants, providing what society wants, insight into that, commentary onto that. I mean, look, we're attracted to listening to this talk about this inflation talk, but we've been talking about this clickbait coming since January and December even. Problem is, it's just hitting the market a lot harder than expected.
Scarred and didn't want to own things. So you had this whole generation of like Uber, Airbnb, all these shared services took off. All these peer-to-peer lending networks took off. And the shared services certainly were deflationary and had a price, decreased prices on the more traditional services that were out there. So I'm kind of curious as I look forward over the next year to see what comes out of this. There's no way we have stopped the world for a year, the economy for a year, and we're restarting without the birth of new industries. So I think that's something that's going to be interesting to kind of keep our eye on.
Josh and Leah, thank you both very much for joining us. Much appreciated as always. And Sarah, Mike, just very quickly to take it back one quick step. I actually wonder whether the peak we're seeing at the moment is the number of people that are willing to say the inflation is transitory, despite ongoing huge prints. I almost wonder whether that's the thing that is more likely to be peak. The people are like, oh yeah, we don't need to worry about this. We don't need to worry. Well, it's not consensus. Look where the yields are.
But there are a lot of people and a lot of the banks that are still saying that this is a problem. The Wall Street Journal every single day pushes against the transitory debate on inflation.
And as I always say, these high inflation numbers raise the denominator for when we calculate it down the road. There's a mathematical drag on inflation after you get
there.
And yet the month-over-month numbers continue to be strong.
This is why
have continued to be strong. Yes.
Yeah.
We'll see. 3 months, I don't know. It could still be transitory. The ARK Innovation ETF.
Yeah, go Sarah. We still have a chance. Yeah. All in. Diamond hands.
Brand new investment and board membership of a fintech company. Pretty interesting move there. Plus, airline stocks have been grounded over the last month amid new COVID concerns. Coming up, a top airline analyst on whether he thinks these stocks.
Oh man. Yeah. Well, look, I get it. It's every time I run a poll, it's let me look at the last poll that we did on inflation. Okay. It's been a while since we've done a poll. We last did our poll on July 6th. And there were 3,600 of you voted. We got 13,000 people here. Can we please? We need to do a new updated poll, okay? Let's do a new poll. Okay, can I get a commitment from you to vote in this poll? All right. Time for the age-old question. Will inflation be transitory or not? It's transitory, under 2% in 2022. Transitory, under 3% in 2022. And then let's do, how about, we'll have 4 options. Not trans, over 3% in 2022. Not trans, over 4% in 2022. Ooh, this is a new style of question. We haven't done this. AKA, are you camp Sarah Eisen or Michael Burry? Oh, well, I can't put him in. So Michael Burry. I'll just tag him. There we go. Since he doesn't have a Twitter anymore. All right. So I want to know. I just posted this. We got 13,000 people here watching. I'm counting on at least 13,000 of you to go vote. So in other words, every single one of you, I would love to hear from you. Do you think it's going to be transitory or not? And you can see I have defined transitory by saying that it would either be under 2% in 2022, under 3% in 2022, not transitory, over 3% in 22, or not transitory, over 4% in 2022. And then I also wrote, AKA, are you camp Sarah Eisen or Michael Burry? All right.
Well, when I first met Vinay, it was at an ETF conference where I was, or an ARC was, kind of a curiosity. It was in 2018, and nobody believed we would make it. Everybody was curious, how could an active manager work within an ETF wrapper? That's for passive, it's fully transparent. But Vinay believed that we were going to be successful and believed in our transparency, our active, our information flow. And he's run with that, with the Tiffin companies, very focused on transparency and bringing in intelligent access to especially registered investment advisors and institutional investors. So we were intrigued with his business, or we have been intrigued. We've piloted some of his services and have been very satisfied with the result.
So Vinay, it brings us to you and what you're trying to build. Obviously, there's a lot of money going into fintech, not just from venture capital, but some of the biggest banks, JP Morgan, Visa, doing billion-dollar deals in the last few weeks. So I think of Magnify, your subsidiary, as a sort of Google for investments, but you're expanding into actually selling the investment products. Talk about what you're trying to build, what your vision is.
Yeah, thank you, Sarah, for having me here. Cathie, thanks for joining as well. And you're absolutely right. Look, fintech investment has gone from, VC investment in fintech has gone from 4 billion in 2016 to 8 in 2018 to 35 billion last quarter, just in fintech. But a lot of this activity has been largely focused on payments, lending, neobanking, and what's happening in the space of wealth and investments is still new and still nascent. So Tiffin, we think, is part of the solution. We are a platform that really builds fintech products for the world of investment and wealth management. And what we are really doing, Magnify, which is one of our subsidiaries, when we presented it here in August, we had a few 100,000 users, which the number of searches on our platform has exceeded 10 million last year, which is clearly telling us that the marketplace needs a simpler, easier, more natural way to discover, compare investments. And the next natural step for us was to enable action. How can you discover, compare, and then maybe invest, which is what we're doing now with our...
So quick note, this is basically a company where they build fintech companies. So they do the infrastructure for fintechs.
You used to push people after they search stuff to other asset managers and brokers. Now you're going to do it yourself. How do you take your commissions?
Great question, Wilfred. So I think that, this goes back to my academic background. It's pretty clear there's lots of research and evidence that excessive trading hurts performance. And we also know that, guess which segment of the market trades excessively? It's really the discount brokerage audience. Wow. And the discount brokerages, all of them have an incentive to promote trading, whether it's through commissions or whether it's through selling order flow. So we thought hard about how can we build a platform that is really investor focused and encourages investment. So we don't make revenues from selling order flow or from commissions. What we do is charge asset managers, investment managers who access the investors using our platform. And we do that in a very transparent, simple way, where if you go in and search for example, e-commerce without Amazon, you will find the first result sponsored in a very transparent manner. We also have subscription services.
Cathie, wanted to talk a little more broadly about fintech. We know you're a big fan of it across all of your portfolios, and it's been a great play for you.
SoFi is different.
Some of those stocks, though, on simple multiples can look quite expensive, and we wondered whether we'd found a cheaper alternative for you. Earlier on the show, we had Bank of America Chairman and CEO Brian Moynihan, and here's a soundbite from that interview.
We are a technology company, and we're basically huge, capable technology platforms.
Okay, I heard him say that. They literally asked him, are you a fintech? And he says, we are a technology company. I'm like, bro, Bank of America, why don't you just be straight with people and go, we're not like, my answer would have been something more like, no, we're not a fintech. A fintech is a smaller company that doesn't have the experience of an institution like us. If I were Bank of America, right? Like if I were pitching them, I would go from that angle. Like, we actually have way more products and way more servicings. We're not a little baby financial company. We're a big financial company with better options for our clients, right? Like, that's the pitch I would have given. But this pitch, in my opinion, was just like dodging the question. Sorry.
Cathie, I'm being a little bit cheeky here, but seriously, would you consider buying Bank of America as a fintech company for your portfolios?
Well, we do. We would not. It's not what we do. We are very focused on innovation and very rapid growth companies. So our revenue growth is north of 25%. So we're not going to see that from the traditional banks. But what we will see is much like what has happened in traditional retail. We have Walmart and Costco and Target. They are doing very well, while a lot of the market is hurting badly. So we do think that industries that are going to they're under attack from fintech from many, many directions, no question about it. But the biggest, and those who invest in technology in the smartest way possible, are going to basically consolidate the industry. We do believe that what has happened to retail is going to happen to financial services at an accelerated rate.
Makes sense.
Cathie, wanted to take the opportunity with you just to ask about some of your other investments. Obviously, a lot of buzz and people pay attention when you come on. You made a lot of news warning about China and have been unloading some of the Chinese names amid the crackdown we've seen from the Chinese government. What do you think is going on there, and what happens to your holdings that are still quite substantial in names like Alibaba? Are you just going to continue to unload?
Well, what you've seen is mostly in the flagship strategy, which incorporates all of our innovation platforms, all of our ideas, scarce real estate, 50 names. And when we see an assault, and I would say it's more on the valuation of many of these names, we will pull out and consolidate towards higher conviction names. In our other portfolios, what you'll see in our autonomous technology and robotics strategy, ARKQ, for example, we haven't done that much except at the margins with those companies that we believe need to expand outside the rest of the world in order to sustain their growth rates. We do believe that China is clamping down. I don't know if it's capital controls. I do know there's a little bit of a retaliation against the Biden administration's policies, which are a continuation of the Trump administration's policies. I think that's been the biggest surprise for China. And I think for most investors, we thought that the U.S.-China saber rattling would diminish somewhat. That has not. What you will not see us do with the Chinese stocks is pull out of those names that are more endemic to China itself. China does want to be a leader in innovation and is very supportive for its companies scaling as quickly as they can internally. What I feel is going to hurt at the margin, though, is any company, and in fact, in their last policy announcement, they said any company with more than 1 million users. And as you know, in China, I think WeChat has over 800 million users. They're going to be under tougher regulatory scrutiny. So I do think that's a valuation downgrade. I think that has happened. And let's see what happens from here. As I said, I don't think China wants to cut itself out of the innovation game. I think it'll encourage it internally, and we'll wait for things to settle down, and then again reopen and allow its companies to scale more into the rest of the world.
What about, Cathie, China's clampdown on Bitcoin? Did that also warrant a valuation downgrade in Bitcoin?
Well, it was the combination of that and the ESG concerns that Elon Musk headlined at one point in time. So yes, there's been a downgrade, but let me give you a comparison. in 2017, China shut down all of its exchanges, the Bitcoin exchanges. And the market went through a big fallout because many people thought, oh my gosh, most of the trading is taking place in China. This is the end. Well, guess what? It migrated elsewhere in the world. Japan, Korea, and Thailand were the biggest beneficiaries back then. And as you will remember, after that, Bitcoin started to scale from $1,000. It was actually less than $1,000 to $20,000 in that 1 year. So I think the same is true with miners. Somewhere between 50 and 65% of all mining, Bitcoin mining, was in China. I actually think it's a healthier phenomenon to disperse that mining. And a lot of it is coming to the United States and moving towards renewables. And as you know, we have just done a paper with Square. We're going to have a conference on July 21st. We're one of the hosts with Square, where we're going to explain how Bitcoin mining will probably become part of utility ecosystems and will proliferate renewables faster than would otherwise be the case. So we're pretty excited by that. And we think that Elon Musk and Tesla generally will become a part of that ecosystem. So we think this is temporary. We think institutions pulled back and said, wait a minute, what do we have here? ESG is top of mind. And I think we're answering those questions. And at this conference, you'll see there could be nothing better than Bitcoin in terms of ESG, governance with the transparency, social. This is a little bit of a different use case, but enabling economic empowerment throughout the world, and environmental. If we're right that this community, Bitcoin community, is very environmentally conscious, as are the institutions, I think that we're going to see all of the E, S, and G answered at that conference.
Well, it's a non-consensus view on certainly on Bitcoin right now, Cathie. But maybe you're reassuring the Bitcoin fans they don't have to hate Elon Musk. Speaking of Mr. Musk, you know I was going to ask you about that and Tesla and your position.
Yep.
He said this week at a trial, Cathie, that Tesla would die without him. And I'm curious whether you agree and what it says about a company that you value at almost $2 trillion that the CEO says without him would be worthless.
Yes. Well, I think that getting through the 08-09 near bankruptcy was Elon Musk brute force, determination, and creativity, ingenuity. And I believe also that it's move up to this point, he has been very critical, especially around the move towards autonomous. I know most people don't believe that that's going to be successful, but we believe it's going to be very successful. And he has been driven and focused and has not let short-term oriented shareholders divert him from that mission. So I do think, just like Amazon, if Jeff Bezos had not been there, think about all the years. I remember I suffered with it.
But what about going forward?
But all the years, Jeff Bezos, during the tech and telecom crash and for, I think, through 2006-07 after, he was saying, we are not going to be a profitable company. We are going to reinvest all the upside from revenues into the business, and we are going to take the lion's share of this business. Not only that one, and AWS. So these leaders who are willing to buck up against their largest shareholders and say, no, we must invest now if we want to capitalize on this exponential growth opportunity. I think I put Elon, Jeff Bezos, Steve Jobs in that category. You know, Apple certainly would have disappeared were it not for Steve Jobs. So these are very special visionary leaders. There are not very many of them. They don't come around. There aren't this big a set of opportunities either. We think there are more now than there have been historically because of all of the innovation evolving. But I understand what he says by saying he doesn't like to be a CEO, but he had to be. And I agree with him. I do agree with him.
She didn't answer.
I wanted to come back to Tiffin and your...
Because she didn't answer going forward, and now they're off the topic. I'm kind of bummed about that. Like, what if he left today?
And I wondered whether you were outright critical of some of those apps, like, for example, Robinhood, but many others too, that are incentivized by driving volumes. And what makes you confident you'll attract those retail traders that certainly at the moment are very much engaged by trading stocks, whether or not your platform might offer better long-term returns to them or not?
Yeah, Wilfred, great question. Look, I think Robinhood has built a great business for themselves for sure. And we respect them for bringing many more participants into the markets. It's just a natural evolution that once you democratize access, I think access without intelligence is detrimental. And our purpose is quite different from Robinhood's. What we want to do is to promote investment, longer term trading, and better outcomes. You know, we believe in gamifying knowledge for better outcomes rather than gamifying trading, if you will. But one needs, one step had to precede the other, is my view on this. Today, there are enough participants, even beyond Robinhood. There are many discount brokerages. So the segmentation of the audience across brokerages provides enough opportunities, we believe, to attract folks who probably want to invest more responsibly, more intelligently.
Why did they go back?
And finally, Cathie, I always ask you every time you're on what you think is the best opportunity right now. A lot of these hyper growth names have been hit and have not rebounded with the NASDAQ and some of the mega cap tech names. So where do you see the best opportunity among all the names you like, or even maybe some new ones?
Well, we've had a good rebound. Sorry, but we've had a good rebound since mid-May. I think, and so growth has come back into fashion. I think we're in a bit of a dueling match, maybe risk off right now for the market. You were talking about inflation earlier. If I could just lob in a few examples of major deflationary forces we're seeing, lumber prices today are less. They've dropped by almost 2/3. Since the middle of May. I do believe the Fed today is talking about housing risks and so forth. So perhaps that's one reason. But that's been a severe drop. As copper has come down 10-15%, we are seeing, even in the auto space, the Manheim used car index for the first time in 13 months ticked down. We believed used car prices are going to fall. They've gone way too far, way too fast. And we talk all the time about the deflationary forces associated with inflation. I believe Leah earlier mentioned it. But it's not just on the disruptive innovation side. Are companies causing these falling prices that explode demand? That's good deflation. There's another thing going on. It's called creative destruction. And companies who have not been keeping up with innovation are going and have been leveraging up to buy back shares and satisfy short-term oriented shareholders. They are going to have to service their debt by cutting prices. So I think not only do we have good deflation and bad deflation at work here, but now we're seeing the beginning of cyclical deflation. And I think we're in a risk-off period. I know we got hit today. A lot of growth strategies got hit. There was a shift towards defensives. And I think there's a lot of confusion. But if growth is going to be scarce because inflation is going to come down, our kind of strategies, which generate revenue growth rates in the 25% plus range, are going to shine longer term.
Cathie Wood.
Yeah. Okay.
No, sorry, I didn't mean to cut you out.
I was just going to say, so, our top names, as usual, Tesla's at the head of the pack. Roku is a very important name to us. Square, Zoom, Shopify, Teladoc. Many of them are described as stay-at-home stocks, and why, we're going back to work. Why are you paying attention to them? What we believe is the world coronavirus crisis changed the world dramatically and permanently. And when consumers and businesses find faster, cheaper, better, more productive, more creative, they're not going back to the old world. So many of these stocks have been cut in half and then some, because there have been algorithms saying they're stay-at-home stocks, sell them. We think that's a mistake.
Cathie Wood, thank you very much. Vinay Nair, thank you as well for joining us from Tiffin. And congrats again on the new addition to your board. Thank you both.
Bank of America didn't make the list.
No,
That was a good one to end it on. Okay, I want to just add some commentary on this because, there's some things that were really interesting on this. Oh boy, that was a priceless way to end that. So some things that are very important to highlight, some notes that I took from what Cathie Wood just said. Number one, I love that she makes it so clear that they target growth companies. Look, Bank of America is a company that is not expected to grow anywhere near like fintechs. That makes sense, right? Because fintechs are starting small and they have explosive growth ahead of them. In fact, Wall Street estimates for growth at a company like a Bank of America right now are 2.8% for 2021, 4% for 2022, 5.6% for 2023. And so it becomes a little bit more apparent that when you compare growth and you're like, wait a minute, that's kind of low, Well, now it makes sense. Why do you think you're paying a lower multiple for the companies? Sometimes I see these threads on Reddit and people are like, oh, if the PE ratio is high, it means it's overvalued. No, it doesn't. It means there's a lot of growth being priced in. SoFi is expected to grow over 51% in the next year, just to give you an example. Let's think of another one. I don't know. What's another one? We could Ally. Maybe you could consider Ally. Ally would be somewhat in the middle. I think I'd love to be able to look up like a Robinhood. No. See, Ally, not much growth here actually. Pretty low growth at Ally, so bad example. And I don't use Ally, but I'd love to look at like a Robinhood growth. But I'm sure you can estimate that yourself too. Your expectations are that Robinhood's not going to grow like a Bank of America at 2 or 3%, or it's going to more likely grow in line with what Cathie's expectations are for growth companies, growing more than 25% per year. I suppose an easy example would be, because we talked so much about it, as an easy example would be comparing to, let's say, Tesla, right? Tesla's growth is expected to be 50% compounded growth in deliveries over the next few years. So that's huge, by the way. So anyway, additionally, Cathie Wood reiterated that during tough times, they like to consolidate their positions. So what they'll do is they'll have fewer positions. They'll sell out of some positions that they have less conviction in, and they'll add more to higher conviction names. She talked a little bit about China, how she thinks there are a lot of risks with China right now. China is possibly creating some issues, because take a look at this. You've got this as a headline here on Bloomberg: U.S. to extend Trump-era halt on economic dialogue with China. Treasury Secretary Yellen and her staff have no plans to resurrect the regular U.S.-China economic dialogue that governed ties between the two nations during the Obama and Bush administrations. And so here's just another example of Cathie Wood sort of, this was a headline piece on Bloomberg here, but Cathie Wood applying headline news to her investing strategies. She's saying, look, this is a problem. When Biden got in, we thought relations with China would get better, but Biden's actually continuing them in essentially the worst direction, unfortunately. Then we have information about her talking about China. She spent a little bit, actually a good amount of time talking about China and Bitcoin, how China essentially getting out of Bitcoin mining, which previously potentially supplied 60 to 70% of all of Bitcoin mining, which estimates vary on this. So this is Cathie's estimate: 60 to 70% of Bitcoin mining was in China, she says. She says from an ESG point of view, environmental, social governance, right, this is a really, really good thing. Sustainability, transparency, social empowerment, very, very good. So she likes this. I've read her paper with Square on Bitcoin. Her paper with Bitcoin, or about Bitcoin with Square, talks a lot about how we can actually use Bitcoin to help expand our green energy grid. This is something that Governor Newsom, for example, in California, would be very smart to pay attention to. Like, why don't you pay attention to the fact that we could work and incorporate blockchain, incorporate Bitcoin, and utilize this with green energy expansion, so we could use energy that's otherwise being wasted. Wonderful opportunities. This is why I'm running for governor of California. And you should go to my rally this weekend in Bakersfield. Go to meetkevin.com to sign up. And, of course, get 40% off on my amazing coupons for building your wealth. Link down below. That coupon code does expire on the 22nd. You get lifetime access to the programs. And prices will be going up on the 23rd. Now, Tesla. On Tesla. Elon Musk in testimony. I actually pulled up the exact quote so I could get the appropriate context, because personally I believe context is very important. In a statement during his trial about his acquisition of Solar City, he claimed that while the CEO position is one that he doesn't necessarily want, he must maintain the position, or quote, frankly, Tesla is going to die. Yeah, that's not good. That is a very current statement. Elon Musk is saying presently Tesla is at risk of dying without him. When Cathie Wood was just asked about that on CNBC, she didn't answer. She did not answer that. She literally talked about Elon Musk and how important he was during the bankruptcy phase or near bankruptcy phase in 2008, 2009, how important Jeff Bezos was to Amazon when it was, and how they didn't want to be profitable, how they wanted to reinvest everything, how important Steve Jobs was to Apple during the tough times in the 80s and 90s. She told us nothing about her opinion about what if Elon Musk leaves tomorrow. I didn't really like that non-answer. I don't know if she just forgot to get to that part, but Sarah Eisen had a pretty blunt question, and we got a miss on that one. Personally, if Elon Musk today is saying Tesla's going to die without him, that's scary, right? That's scary to hear. Now, I do personally believe that this could be just an exaggeration of Elon Musk. I do believe that Tesla is in a wonderful position to grow and sustain without him, but I could be wrong. And I'm not trying to undervalue what he contributes, but it just makes me wonder, like, could Tesla continue at this point like Apple continued without Steve Jobs, or does Tesla need another 10 years of Elon to get to that point of stability, right? When Steve Jobs unfortunately passed away and stepped down from Apple before that, from Apple was very, very well positioned. I mean, we were, what was this, 2013 or 14? iPhone 1 was out, iPhone 3G was out, the iPad was out. I think FaceTime was already out at that point. Let me see, Steve Jobs, because FaceTime was 2013 or 14 as well. Oh, wow, wait a minute, never mind. He died in 2011. Oh, I misaligned that a little bit. My bad. Maybe I'm just not remembering when FaceTime came out. FaceTime release date. Oh, see, okay. I just had my dates wrong. FaceTime came out in 2010. The iPad came out in 2010. The original iPhone came out in 2007. So a lot of these really important, like, innovative products came out right before his death, and these were incredibly successful products. So I'm surprised I was a few years off on that one, but I was correct in my order, just wrong in my years. Anyway, then let's see here. We also have this talk about the market, this dueling match in the market that Cathie was talking about. This really has to do with the dueling match of inflation. I actually tweeted about this a little bit. I didn't really love her investment or her joining the board of this Triffin company or whatever. Maybe this is something that I mean, it's not a company I believe that we can invest in. Let's see, Triffin. Let's see if they're public. I don't believe it is. I think it's way too new. I think it's a larger sort of company that, or sort of a company that develops the backbone or infrastructure for companies like maybe a Robinhood or a SoFi or other sorts of fintechs, or maybe smaller banks wanting to become fintech-esque, but not something that's available apparently to be invested in right now. So wasn't so excited about that. We did hear talk about the dueling match of inflation, deflation. I do want to give you these poll results. I do want to get more of your votes here. So please go on Twitter and vote. But take a look at this. Will inflation be transitory or not? AKA, are you in camp Sarah Eisen or Michael Burry? And we've got the vast majority of you voting here, transitory, less than 3% in 2022. Almost half of you believing that. Another almost, just over 17% of you, so this would be about 60% of you going for the transitory argument, and then another about 40% of you going for the not transitory argument. But go ahead and cast your vote, because this is very early in the poll, so it could still shift substantially. But cast your poll vote to see how you feel at Real Meat Kevin on Twitter. Okay, Cathie Wood then went back to her argument about deflation and how there are going to be a lot of deflationary forces, creative destruction, innovation. That means older companies are going to have to drop prices to try to be competitive as they potentially go bankrupt and disappear as more innovative and better technologies advance and take over. This is an argument she's talked about many times before. It's not really worth fully rehashing it right now. She did also reference that lumber fell a good chunk here in the last few weeks. I don't know if lumber is exactly the best reference. Okay, look, I want to be fair. I'm a big fan of Cathie Wood, but I'm not exactly sure that lumber is the best reference to say deflation is here, because lumber just ran up like crazy. So it's no surprise that the speculative bubble of lumber is now behind us, and it's falling down. So I'm certainly, and look, I'm somebody who believes inflation is going to be transitory, that we're going to have a bigger risk of deflation, but I'm not going to use lumber as my as my backup. So as you can see, I have my differences of opinion to Cathie Wood, but in general, I think we're on the same boat. So hopefully you appreciate this insight. If you do, make sure to subscribe. And somebody says that Cathie Wood did say that she agrees with him about, yeah, but okay, maybe. So I just got a notification that some of you say Cathie said she agrees with Elon. So maybe she said she agrees with Elon, but the thing is, her entire conversation was focused on the past. She didn't give us any insights into what about going forward, right? Like what if Elon leaves going forward? And I think that was a little bit frustrating, which is also what I highlighted in the past few minutes when I talked about it. Anyway, thank you so much for watching this, folks. Thanks for being here. If you have found it helpful, subscribe. Use that 40% off coupon code link down below. Price does go up in about a week. It's actually 8 days. And we'll see you in the next one. Bye, everyone. And we'll see you in Bakersfield as well. Bakersfield, go to meetkevin.com to sign up.